folks. Tuesday, 1st of February 2022. So we made it to February. 88 Energy going to start drilling. So put a video out about that this morning on YouTube. But yeah, well, what are we looking for here today on this session? Well, we have in the US session, manufacturing PMIs for January set to come out 55, even below prior 57.7. And then the tier 1 data at 3 o'clock is going to be manufacturing ISM manufacturing PMIs for January 57.5, below prior 58.7. We're also going to get the JOLTS job openings for December, set to come in 10.3 mil, below the prior 10.562. And that's going to be it really. APIs tonight at 9:30 for oil traders. Yesterday we did really look in the pre-US session. We did really look for the buying to come in. It did come in on the US session, and then kind of quite kind of slowed down quite a bit, but was quite obvious that we were then going to get bid on up into the close, and that's certainly what we had out of the closing on that session there yesterday. So if I go on over to the charts, um, you see, for example, the Nasdaq, uh, really nice bid on the open drive there, really, and for me on the equities picture, the nicest trade that I had good contextual levels with was the Dow. Now this is important. So my cursor is synced across all charts, right? So I'm on the Dow here, right? So you can see that 12 o'clock midday we were holding on these 30, was it 34 30 34 358 area high. Then we came into the open. We did reverse down and really put a bit of pressure on there, but eventually just firmed up. And you can see it was at that time we had this pullback on the Nasdaq. We also had this kind of pullback on the SPOs, and this is what was going on in the Dow, right? So you can see clearly across the equities picture in the US that just a little bit of selling, as I'd said, on the open, and then generally supported by the big brother on the Dow there, to then get on up. And the Nasdaq percentile wise, I think probably making the best gains in the day. It did slow down 4 o'clock, but the bid did continue into the close quite nicely across these equities. So for today, I mean, look on the Nasdaq, we're going to be testing back up into a nice deep area here. Was resistance. Well, we have it as resistance here. Really a confluence of a lot of trade there through uh, July and October last year. So we're tracking that. I do see decent resistance to come in here, but largely the dip is being bought, right? The dip has been bought here last week. So generally, I think a drift further to the upside. Do be aware, pullbacks to the 50 EMA now on Nasdaq to test for resistance is absolutely key now, right? I think that may unfold on this market today. Little reversal. Does it mean that we're going to sell down a lot more in the Nasdaq? No, I think we're just finding what was resistance now turned support here, right? So just be careful on that, getting long on the open and whatnot. But yeah, you've also got the 14, 8, 10 halves here as well. So do be mindful of up there, right? That's the NASDAQ. Um, up, booze. Reversal down onto the 44.86 is half. We did see a little bit of selling down on what was a nice bid up on the DAX, and so you see the DAX has driven the SPOs down, and the Dow back down to test these levels of support this morning. I think this is really strong for us to then continue on to the 100 EMA on the SPOs. That's why you may not get this Nasdaq pullback. We're about to get unemployment rate out of the EU here, set to come in 7.1%. It's come in 7% there. Very little action on the euro on the back of this. And so, yeah, I think we continue to lift uh, higher in equities today. See the Dow support 34,907s. Also, it's tested on the 20 EMA this morning. I think 35,312s and beyond is where we need to go with the Dow. Show you that on the daily. Here you go. Here's your downtrend. I think we've had the flush out below or breakdown on the first this week anyway, or 2 weeks ago. The breakdown was really not great. A lot of volatility than before as we stare down the barrel of 5 interest rate hikes this year. But that's priced in, right? And so let's go on up. Let's go on up. Yeah. Oil, it's really toying with everybody right now, but we do have to wait for a JTC and OPEC Plus meeting to come. JTC today, and oh, thanks, Rob. Not sure about the mic. Oh, let me turn up the mic here. Just get that up. Hopefully, this is a bit better. Yeah, I think for us to hold the 8680s is really key here on this. Is that any better, Rob? Just checking. But really key for us to drive further up here. So 90 spot 37s remains target on the upside on the weekly bars. You can see the market on the 60-minute is really testing that support, testing that 8680s a lot. Prior to that, our best support here was the trend, right? The trend below. We'll just tidy this chart up a bit. And we are going to keep tracking this gap area because it was quite handy, so we're going to keep tracking that. But 8680s has to hold in order for us to get up, and so far it is. The market finds it very hard to close below that in the recent 2 days trading, 3 days trading. So yeah, that's going to be a nice move, I think. From there up to the 90 spot 37, so that's a 4.11% move. But just be careful because we have seen, buying on this level flushed out, right? You have seen it flushed out, so you don't want to get flushed out. You want to get in after the flushing occurs, and so you want to see that flush occur. Candle closes above 8680s. All right, get long. Up you go. So definitely we need to wait and see what OPEC Plus are going to say. There is talk of them potentially putting on 600,000 barrels a day this month, or sorry, at this meeting, compared to the 400,000 that they've been working off of. I don't think they're going to do that. I think that would be a bit too much of a knee-jerk reaction. The market's going to think, well, are they going to do 600,000 at every meeting? That hasn't been talked about. That's going to take a lot of sort of telegraphing to the market for the market to accept that. So yeah, let's stay with the long picture on oil. Gold is also making some hay here above the 1800s, and really it's quite simple what's happening here on gold. If we go out on the weekly picture, we simply come down to test on the pennant low. We're gonna basically have a repeat of last week, except in the other direction. So 1785s to risk off, get long, trade back up to the resistance here. That's pretty nice, easy trading. I think responsibly for longs, I'd be looking at buying a pullback on the 18s, and then something a little riskier would be buying a pullback with after a flush on the 1803s. You got to be super active about managing your risk if you're buying the 1803s after a flush down. You're really not going to want to see that yield dropping off, or sorry, the bonds dropping off very quickly, right? So you are seeing that strength in T-notes this morning, which is essentially the opposite, and so that's also allowing gold to get on up here too. And we have a dropping Dixie. Another trade I wanted to cover just before we go is to be aware on the Dixie on the weekly. While we are in a weak dollar day and week now so far, I think this is just a pullback. I think you're going to find support 95.73s, and that will be a nice place to be looking for short opportunities again in the euro. All right, that's it for me for today's session. Yeah, listen, only take the good trades and tighten up your risk. All right, talk to you then. Cheers.